Hey everybody, can you hear me? All right. Let's go ahead and let everybody roll in here for a second, but you can see we're here with Dan. We'll get into that in a minute. How's it going, Dan?
Good. How are you doing?
Good. I'm here in the States and Dan's over in Abu Dhabi. So he's in a totally different time zone.
It's 9 p.m. here. So
Nice.
end of day.
Yeah, so later on, so we'll talk with Dan and he'll go around. He's got a little slide deck to show. He is a teacher by day, so that'll be an interesting one because there's structure to teaching and learning, and I think a lot of it applies to trading. So I think he'll have a good perspective for everyone. And then if we get enough likes, let's say 50 likes, 75 likes, we have 100 likes. Sorry, there's the threshold. 100 likes, we'll do two $200 credit giveaways for the desk. So let's get those going. Like and subscribe, guys. In the meantime, let's post into the chat. How'd everybody's trading day go today? Or is everyone on hold awaiting FOMC? Let's see it. They're all blaming you for breaking Tradovate, it appears.
Me?
I don't know. You're in the hot seat.
Sorry, guys. Sorry. All the way from Abu Dhabi, breaking Tradovate, of course.
No trade day. I'd like to see that if it makes sense for you. Cool, guys. All right, let's just get into it. Mr. Dan, I'll let you introduce yourself.
Sure. So yeah, my name's Dan Cook. I'm first of all a fully qualified school teacher. Been teaching now for 11 full years. Got experience teaching in the UK as well as China as well, and now Abu Dhabi. So I've got experience both in the UK and international schools as well. And I came about trading in the most bizarre way, really, because everybody, of course, remembers COVID when that hit. And, you hear the story of most traders. It usually starts with a COVID story of some kind these days now, doesn't it? But with mine was really bizarre because obviously China, was one of the main places where people believed it started COVID. And at the time when COVID broke out across the world and first broke out across China, there was a little bit of lockdown in China. But apart from that, there wasn't really much lockdown at all. So while the world was in lockdown, we were in China because I was in Shanghai at the time when COVID hit. And life was pretty much normal between, 2020, 2021. And then in March 2022, I was in school one day teaching on a Friday. And one of the teachers came to me and he was like, "They've messed it up." And then I was like, "What?" And it's like COVID had it's got out in Shanghai. Like there were like thousands of people in hazmat suits from the government walking the streets. It was like something you'd never seen before. We were told we were going to be in lockdown for a week. The lockdown ended up lasting 6 months. I never stepped foot in that school again because the lockdown was that intense. Not only that, but we were in my compound. They actually put like bars on the apartment doors and stuff to stop people getting out and stuff. And the only time if you were allowed out
are etched in my head
for sure,
with a bunch of apartments and everyone's screaming and singing and
for sure. I mean, I had a period of time where I actually had like no food because literally I thought the lockdown would only last for a week, and we were told that food deliveries would carry on. So I got a little bit of food, and then when it hit the lockdown on that first week, no food deliveries, no shops were open, nobody was delivering, and in the end, we were getting these government packages of like bamboo sticks and things like that, and it was just a crazy time.
When you hear your trading conditions are bad, remember this story.
Yeah. But this was where I came across trading because I have to admit at that time, this was 2022, so only 4 years ago, but I wasn't very good at with money management, I would say, just in general, just money in general. I wasn't really saving a lot of money, just spending whatever I got, really. But this was a point in my life where I was still getting paid by my school during this time, but I couldn't spend it. And I got to a point where it's like, well, now I'm getting all this money coming in. I can't actually spend it. Well, what can I do with it? And then I thought, well, I could put it in the savings account and just let it. And then I thought, well, no, I'll look into things a little bit more. And I don't know exactly how I managed to come across trading, but I did. And I then went down the usual, YouTube University sort of route, looking at loads of YouTube videos on trading, believing I found the magical strategy from one YouTube video when price crosses is free, trend, indicator lines, then you buy or you sell and it's going to make you a lot of money. And then you do it and you realize it's rubbish, and gone down all that route and stuff and everything. And then eventually left Shanghai 6 months after the lockdown started because it was just so bad there. But my bug for trading has sort of caught hold of me. I sort of got so interested in it, and I carried on
futures
learning.
right away? Forex,
no,
futures,
it wasn't.
stocks?
It was through the Forex lens.
Okay.
I would say my first memory was eToro, downloading that app on my phone, placing some random trade. This is about 1 month into learning what trading was. Took a random trade, lost about $20 or something like that, and then closed it quick. I was like, oh, didn't like that. And I just thought, no, I need to learn this properly. And I'm quite good at that. I'm quite a studious person. So I spent, the next couple of years after that really locking in, learning everything that there was to learn about trading, just the basics, bullish, bearish, green candles, red candles, what are candles, all that sort of basic sort of stuff. Spent a long time learning all that, getting the basics in, making loads of notes. Still no live trading or anything like that. And I just, I sort of kept the learning route for too long, I would say. I think because I was sort of scared to sort of put my own money on the line and to sort of trade. So I just carried on making an excuse to just keep learning and learning and learning. And I did this for a couple of years until eventually I took the plunge into live trading, which was in futures. So it's a bit bizarre for me because I did all my learning through the Forex lens, never really took a live trade through Forex, but then did so through futures about a couple of years ago. So I spent about 2 years learning. And then a couple of years ago, I then started trading live, which was with Top Step at the time, because only 2 years ago, Top Step was one of the, only options at the time, So, and that's how I sort of got into it. And then I've just spent the last couple of years just, refining my craft as it is.
That's awesome. Yeah, that's a really cool story. I love the international part of it. And, I'm glad you're out of that lockdown. So
Absolutely.
Yeah, do you want to, I guess we could pull up the slide deck, or you brought sort of a explanation of how teaching relates to trading and how you can get better because of some of these tips. So let's go ahead and go through it.
Yeah, absolutely. Because I think if you go to the next slide, there is a crazy amount of similarities between education, teaching, and trading. And, I didn't realize this at first until, I started getting some more years under my belt and then starting to see the similarities. But I only realized, I think, once I realized I was starting to become the biggest hypocrite on the planet. Because in my classroom, I would be telling my kids, maybe they got 20 out of 40 on a times tables test. And I would be, they'd be really disappointed. And I'd be giving them the big speech saying, it's okay. It's only 20 out of 40 today. Like, this is just one, failure today. It's okay. No problem at all. Just think of the big picture. Think about next week. You want to get 21 out of 40, 22 out of 40. That's fantastic. That's progress. That's a little few steps forward. That's what it's all about. Just making those little few steps forward all the time. And I make this big speech to them, making them, see that you can't get emotional about one result today. And yet I would go home in the evening, trade, lose, and then be super emotional about it. End up taking, revenge trades or over trading and stuff. And it took a while, but you begin to realize what a big hypocrite you are when you're telling your kids one thing and then you're going on the charts in the evening. And then
we're all human. I think it's being aware of it. It's not like I don't get emotional when I'm looking to trade and I lose a trade. It doesn't change. It's your feedback loop. It's how quickly can you
For
close
sure.
that feedback loop and make proper decisions because of that.
For sure, and that's what I'm telling the kids in my class as well. I'm saying, it's okay to be emotional, but it's a case of just seeing that bigger picture and just seeing it as an opportunity to learn. That's the main thing I'm trying to teach the kids in my class, is that, when you do make a mistake or you do fail in something, to actually just, be able to learn from it. And that's what I've been trying to do in my trading, and trying to really instill the same lessons I'm trying to instill in my kids in my own trading, making sure that every loss I look at it and try and take something away, from it. So, that was one thing there, really, just, not seeing failure as, actual failure, but just seeing it as an opportunity just to get some feedback, learn from it, and be able to, use that moving forward, And also as well, it's one of those where I see with the kids in my class all the time that, their progress let's say fractions in maths, their progress in that topic is not going to be like this. They're going to have times when it's going to be like this. They're going to have a couple of weeks, maybe even months where they just don't get it, and it's going to be, it's not going to be completely like this. And I kind of realize, that's the similarity to trading as well, really, there, where, the progress you make in trading, there are going to be times, just look at the P&L curve. It is never going to be completely like that the whole time. You're going to have plateaus. You're going to have times where you feel like you're not making any progress, and then you just and then that light bulb clicks and you just got it. And then things start going in the right direction. I see that so many times with kids in my class where they haven't got it for weeks and weeks, and I'm wondering, are they ever going to get it? And then suddenly the light bulb goes on. And these are the moments that I feel like I've started to have with my trading over the past, year or so, where I feel like, particularly with trade management, for example, just not really finding a way that really works for me. And then suddenly I find something and it just works for me, feels right to me. It just fits me perfectly. And that light bulb goes on, and then things just start going in the right direction. So I think for traders, just realizing it's never going to be like that. You're going to have.
So how do you deal with, obviously in traditional education, it's sort of, once you learn how to do, equations, or the basic of an equation, you've learned it and you're done, and you can get 100% on your tests from that if you're good at it. With trading, it's a little different because you're relying more on the statistics of the results, and there's sort of like a blurred boundary on that, where in learning and education and math and all the subjects that are traditionally taught in a school, you can just get to 100%. And if you're put in the time and the work and you understand enough, you can stick at 100%. Theoretically. Trading, not so much. Like, you can't control the markets. So
no.
Do you have any thoughts on that, I guess?
Yeah, it's one of those where you're completely right. And that's why many people struggle with trading, because it is so different, isn't it, to any of the usual sort of routes that people go down, both in school and then afterwards as well. That with the markets, a lot of it is out of your control. But for me, it's just about, worry about what you can control, isn't it? It's where you put all your attention on what you can control. Once you click that button and once you're in the trade, there needs to be a bit of a, because you can't control it once you're in there. If you feel your emotions are heightening and getting more as soon as you click that button, you've got a lot of work to do there, because you are putting all your attention on the wrong thing. You need to be putting all your attention on, your entry criteria, your checklist, your reasons for entry, and then how you manage that trade once you're in it. Those are the things that you can control, can't you? But with it going up or down, you need to let that go, because it's going to kill you. And we've all been there. We've all lived through every single tick move, on those trades which we've oversized or we've taken a revenge trade on. And, my advice to anyone, if you are ever in that position where you click that button and your emotions just spike, I would just get out. Get out. Because I think if your emotions spike, they're telling you something. It's a signal, isn't it? So it's a case of just listening to those signals. So that would be what I would say to your question, is just really focus on the things you can control, because it works in all aspects of life. Do you know what I mean? If someone cuts you up on the road, yeah, you can shout and bawl and all that and get emotional over it, but you can't control other people's actions, but you can control your own reaction, and it's going to make a big difference to how you feel for that moment and for the rest of the day. So it works not just in training, but in all areas of life. Really zone in and focus on what you really can control.
Cool. Yeah. I think the parallels definitely exist in the learning phase and everything else, and just accepting those results as things you can't control is just that's the part that people struggle with, and they'll force it. They're like, I need to push for that 100%, and you have to find a balance.
For sure. And then this here where it says, one moment doesn't define you. This is where, like, in schools, the kids get very hung up on tests, even at a young age. Like, I teach kids of a younger age, and they get so hung up on every single little test and every single little quiz. But they do multiple tests and multiple quizzes throughout the year. And, certainly at that age that I teach them, it's not just one test that defines you, it's the multiple tests accumulated over a long period of time. And that's where that really does link to trading beautifully, because we all get hung up on that one red day or that one loss and thinking, it's not working now, need to switch strategies, need to do something different. No, just slow down. It's one loss.
No one wants to hear that, though, right?
No, of course not.
They want to hear, everyone else can slow down. Let me fix the problem. And no, that's the fix. The fix is not to rush yourself. The fix is to, I hit my max loss. Let's wait till tomorrow. How can I use this time to review? Right? Review and plan.
Yeah, for sure. But I think people just get way too hung up on that red day. Yeah, and I speak from experience. Yeah, because we've all been there where we've had that red day, and you feel like it's time to switch things up. It's time to just completely change things. But actually, it just needs, like you said, just a honest review, honest reflection, and just it's a case of, the way I look at it is, one red day shouldn't just mean that you completely change everything tomorrow, but what you do review in your journal that day, you can then add to a data collection that you start adding to. Because if you're getting other red days and similar things are happening, well, you've got more evidence then, haven't you, that maybe a change may need to be tweaked or something like that, if you know what I mean there.
I do, yeah. Okay.
And then so can I go back to the last one there, because that's really important, this one here, the habits shape identity, because this one here is where, like, if I'm quite a strict teacher in the sense of my kids have very clear routines, very clear habits, very clear things when they come in. Like, when they come into my class in the morning, there's checklists of what they need to do before the lessons start in the day, getting the books ready for the day, making sure they've got their pencils ready, making sure they've got this ready, making sure they get the book out, read the book, and all this sort of different stuff. These habits, and for the kids in my class now, because we're halfway through the year, these are habits to them now. They don't even need to look at the checklist anymore, mostly, because it's built into them. And this is where I feel like this has helped me as a trader, because obviously making my kids do that is a sign that I enjoy that as well. I enjoy a bit of consistency. I enjoy a routine. And that's really helped me as a trader. Like, I didn't really need to change myself too much to become that sort of person, because I think I was like that anyway, because it works well for me as a teacher. Because if you just tell the kids to come in the morning and there's nothing, no checklist, no nothing, and they just do what they want, yeah, it's going to be wild. So it's a case of just that. I think 11 years of doing that in class has made me very much like that, where I enjoy checklists, routines. And as a trader, that's just been so important for me, is just having those consistent habits.
Sure.
Not just in trading. I've got my pre-market routine, which is fine. I've got my checklist, which is great. But what's really been a big difference for me is those daily disciplines for me as well. So things that I'm really looking to focus on outside of trading, things that are non-negotiable for me, things that I must do because I promised to myself that I will do them. I want to be the kind of person who sticks to his word. if I'm saying at the beginning of the year, I want to learn a language, then what am I going to do each day to do that? I make sure now, as part of my daily disciplines, 30 minutes is set out each day to learn that language. And it's scheduled in the morning. When I wake up, before I go to work, I do 30 minutes of my language learning. It's measurable, it's scheduled, it's set in place. And when you have these daily disciplines and you are sticking to them, the more you do that, the more you become the kind of person who sticks to their word. Now, people are probably wondering, what's this got to do with trading? Well, it feeds beautifully into trading, because if you become the person who sticks to his word, does what he says, does what or she does, and does what he or she needs to do, then when it comes to that moment in the markets where it's a case of there's a trade here, it's nearly met my rules, but not quite, I shouldn't be taking this right now, then in that moment, it is easier to follow your rules, because you have become,
you know how to hold yourself to a plan.
Yeah, it's, the greatest form of self-respect is self-control. Can you self-control? Can you do what you say you're going to do? It becomes a lot easier when you've built that identity. So I would encourage people to not just look at their trading and focus on keeping to their trading rules, but what are they doing outside of trading? That's also building that inner discipline, that consistency, that identity. And it's just so important. It's so important. And if you look at some of the most successful traders out there, I bet your bottom dollar that they are super disciplined outside of trading as well, because it's just a part of who they are. I think that's been something that I've really enjoyed working on, is just not just the trading side, but just me as a person, my identity as well.
It's not going to hurt either. That's an idea that's only going to help you in life. So I definitely think everyone should take that advice. Looks like we hit the 100 likes. We dropped the link to sign up for the giveaway in the comments. So go ahead and sign up for that. We'll spin the wheel a little bit later. So this is very important to keep your word. Yep. And to yourself, when you're trading, it's almost like there's another person sitting on your shoulder telling you to do bad things. And once that guy takes over, you're lost. Once you see red and that little guy on your shoulder is telling you to over leverage, or telling you to hold the trade too long against you, you start to listen to him, and that gambler mindset comes out, and you start listening to that. And you can see it in the far distance, right? You see that road to salvation, but it's too long. It's too far. You've seen red. Yeah. You're nervous. Fight or flight's kicked in, and what you got to do is just get ahead of it. So how do you get it so you never get to seeing red? Because once you're there, it's a bad situation.
And that's the way habits work, though, as well, isn't it? They work beautifully for you, but they can work against you as well. You can develop bad habits. So the more you don't follow your rules, you start building the identity of a person who is not keeping to their word. The more you do,
you think today, right?
Yeah, for sure. And then it'll get to a scary point where you don't even believe yourself. Now that's a low point where you don't even believe yourself. You say you're gonna do it, but deep down you're like, I'm not gonna do this. You know what I mean? It's one of those, isn't it? Because you just built that habit over time, and it's your daily choice is so important. But anyway, when it comes to like the way I saw the academic concepts that kind of link into trading, this skill stacking here is really important, because like I link it back to what I would, if I'm going to teach the kids in my class to write an adventure story, right? Maybe they would need to learn how to write similes, how to write fronted adverbials, how to use adventurous adjectives, how to use amazing verbs, and all this sort of stuff they would need in their adventure story for it to be good in an adventure story. I wouldn't just teach all these skills all in one go, okay? Because it's just going to be information overload. They're not going to master the skills, and as a result, the adventure story at the end is going to be no good. This, for me, is the same with trading as well. I think too many traders try doing too much all at the same time. I think it's a case of just, focus on one thing at a time. focus on your entry criteria. What is going to be your entry criteria? Really zone in on that. Really get that down. Get that skill down. So you are absolutely clear. And, it's something that's repetitive, something that, it's just instilled into you. And then you can move on to the next thing with your trading. Maybe then the next thing is going to be, your risk management. How are you going to manage your risk in the trade? Are you going to have a, contract limit per trade? Are you going to have a fixed dollar risk per trade? How are you going to manage that risk? And just, do you know what I mean? And then you move on to trade management. I think just focusing on those one thing at a time will just help you a lot as a trader. Because I think I've been there where I'm trying to learn all this stuff all at the same time, and it is just so much, and you don't master any of it, and you just get a sort of strategy that's just a bit of a mess. So I would encourage any newbie traders in their first year or even 2 years, just take it slow, focus on one thing at a time. And this is another thing I would say as well is I've learned this, that anything sort of worth having takes longer than you think. So, if you say, people are sitting at home and they've said to themselves, right, 6 months and I'm going to be a profitable trader, I'd say double that. Because in reality, that is what it's going to be. In reality, because for you to be able to master this, you are going to have to skill stack. You are going to have to approach this one thing at a time. You may not accept at the beginning, but you will learn to, because you will find you're just not mastering anything in it. And it's just going to take you time, going to take you more time to just...
skill is very important. Obviously, we're talking about the steps and being able to stick to your plan. That's the baseline. Like, to just to get into this thing, you need to have some structure so you can execute on something that you can tweak, that you can improve. Because if you're all over the place and you're just hitting buttons, you're not. There's nothing you can do with that. There's nothing you can say like, well, you should improve on this, when every day is random to a sense. But of course, on top of that, finding edge, keeping edge is an extremely hard problem in its own right. So that's what makes this whole space so difficult, is because not only do you need everything we're talking about today, on top of that, you need edge in the market. I mean, that's the core of what we're doing here, is finding something that you can do that's profitable. And that stuff tends to, change with market regimes. So a few months go by, that same strategy you have is probably might not be effective at all, or not as effective as it was a few months ago. So the ability to track it all, watch it all, see is this my execution problem or is this my edge problem, and map that out and continue to kind of fluctuate with the markets is, good luck doing that if you don't have this baseline of learning, skill stacking. Everything he's saying is 100% valid. And if you don't have this kind of structure, you are going to struggle real hard. And then you'll reach for psychology at the end, right? Because not having this stuff is going to cause psychology problems. I'm sorry if you're talking about this later and I'm jumping ahead.
No.
But not having this stuff will lead to psychology problems, which is why I think there's a lot of psychology stuff in trading. You find on YouTube, everyone's talking about psychology, and they're kind of talking with it disconnected from having a baseline of execution that's solid. You're just setting yourself up for psychology issues.
Yeah, well, it's one of the biggest areas debated in the trading space, isn't it? Psychology first or edge second? Edge first or psychology second? I mean, I am edge first, sort of guy. Like, I think you need that edge, you need that structure, you need that routine first. And it's almost a bit of a cruel irony when you think about it, with the structure and the rules, because most people get lured into the trading space because they like the idea of not following the rules of their boss anymore. And yet they think that trading is going to be, I don't need to follow any more rules anymore. I'm going to be free and I can do what I want and all that. And the markets will teach you the hard way that you do need rules. You do need structure, similarly to your 9 till 5. But the difference is you can set it yourself, can't you? Which is the beauty of it. One of the things the third one, the process over the result. I think most people listening to this will 100% agree with this, where it's a case of your process and valuing that process and measuring how well you did with that process on a day-to-day basis is absolutely crucial. You know, and this is something I instill in my classroom as a teacher. You know, yes, we want kids to have good grades. Yes, we want them to have good results, but the process that they follow every single day, you know, making sure they do all the things they need to do is absolutely crucial, and we reward that a lot. You know, making sure that we reward readiness in the classroom, that we reward them, you know, following the right steps and things like that. This is where in the trading space you've got to focus on the process, because the results will come, won't they? They will cut. They will come.
I like to say,
over a
you
period
know,
of time.
people, their eyes gloss over when you start hiding the results, and process is the most important. But think of process day to day, and think of your results in terms of monthly, quarterly, annual. That's when the results are going to come, right? If you look at every
That's
day
it.
and you're like, oh, I was green today, you know, I'm sure stay green every day if you can. I mean, I'm not saying you don't want that kind of result, but if you're only
Mm.
measuring yourself on if I'm red or green today, and everything else is just garbage,
Yeah.
then yeah, I think that furthers your point.
Yeah, and I think for people as well, a good way for people to truly check themselves to see if they are focusing on the process or the result is to look at their journaling. I mean, hopefully people are journaling anyway. If they're not, then you really need to start. But for the people who are, you know, look at your language and your journaling. That will be a key sign of whether you are focusing on the result or the process. You know, are you mentioning how well you stuck to your process, or are you mentioning how disappointed you are that it was a red day? And it's that's the journal notes can really provide a key sort of insight in whether you are focusing on the result or the process. But if you're focusing on the result day to day, trading is just going to be miserable for you. It's just going to be miserable, because you are going to have red days. You're going to have it. I know on X you see, you know, many traders with these full green P&L calendars month after month, but you know, come on, let's be realistic here. You know, traders have red
I see the
days.
data. I see the data. That's not what you see on Twitter. That's for sure.
No, for sure.
Yeah,
For
it's
sure.
not like
And you got to remember
there
as
are,
well that oh, go on.
no, I just gonna say there are traders that do really well, but you know, a lot of the people posting on Twitter that are posting everything like that, they're not showing you all their accounts or something similar like that. There's
Yeah.
also a lot of lying on Twitter, so you know, just it's gonna affect you when you see that. You have to just step back and say that's not me, and pull back from social media. I definitely recommend that. Let's
Sure,
let's
sure.
go 2 minutes, guys. Sign up, and then we'll spin the wheel, and then we'll get back, maybe answer some questions from you guys. So yeah, let's keep talking for a couple minutes here.
Sure. So this is it. You know, in terms of we've talked quite a bit already, haven't we, about structure. This is where you can really ensure that you are, you know, keeping disciplined every single day. You know, you need your rules for your trades. Need to have some sort of pre-market routine, measurable, be able to take that as you go along. Also, as well, as we discussed earlier, what are your rules for outside of trading before you step on the desk? Are you doing the things that you should be doing to make sure you are in the right mindset, in the right frame of mind, you know, before you get on the charts? You know, are you saying, you know, I'm going to do 5 minutes of meditation before you step on the charts? Is that in your rules? Is it in a checklist? Are you tracking whether you are doing that per day? And that's one thing I would say as well, is that traders need to track these sort of things, because winners track. It's no doubt about it at all. Like, you know, you look at top Olympic athletes or anybody, like, you know, at elite level, they track everything down to the most minute detail. And I think, you know,
they usually record their playing and they watch it later that night, you know, after a game.
For sure. That's also very good in trading as well, actually, which I found, because I just recorded my trades just for content creation initially. And then I found when I was making my content and then, you know, watching the content
Sure.
as I'm editing it. It's like, oh, this is interesting, and it's very cool to sort of watch that.
Which,
But
to
I would
plug
say, you know,
ourselves a little bit, our new beta dashboard, which is available to everybody, we built a recording feature into the platform. So if you go and you're trading, you can very quickly, you don't have to set up OBS, you don't got to do all that stuff. Hit record, share the screen that has your platform, which is likely inside the same browser window anyway. And we'll overlay that with all the trades that you're taking. So when you go back to watch it, we'll even record your voice if you'd like. And this just records privately on your computer. But when you go back to replay it, you can just, you'll have bookmarks already available to you with the transcription of what you were saying out loud. So there you go. So you can see right here, up here on the stream, those are some recordings that Raj has on his computer, but see each of those individual trades that were taken. You can go to those trades that were being taken and see exactly what was on his screen when it happened, and then hop over there and tag the trades and do the work, do maybe some extra journaling. And that's all just kind of built into what we did because we think it's so important.
That's cool. That's actually cool.
Cool. All right, let's do the giveaway. Let's get that wheel up there. You got it, Raj? We used to do the marbles game, but that basically crashes people's computers that try to run it when you have too many names. We tend to focus on the outcome rather than all of our decision making. I encourage reading Thinking in Bets by Annie Duke to anyone trading. It's a great book. I also recommend it. And it's not necessarily trading specific. It's just thinking in terms of statistics and probabilities and making decisions based on those things. I'm in such financial hardship that it is really affecting my trading in a major way. I know what I need to do, but for some reason I just can't follow my rules and forcing. So first thing is just full stop and putting money into accounts, stop buying evals with us or anywhere, and collect yourself, because that hole only gets deeper. You're going to want to think, oh, if I just keep pushing and keep signing up and I keep resetting, I'll get some payouts that'll cover it. You'll end up spending more than whatever payout you get, even if you get, that's assuming you get one. So that frame of mind, I've seen it over and over and over and over again. Don't continue to trade live until you've figured out a plan. You can stick to that plan. You can, and maybe in a practice account or something like that, that you're comfortable that you'll come in the next day and start executing like you want to. You can't be in that hazy spot. It'll kill you, man. So please do yourself a favor on that and don't spend any more money.
It's true what they say about trading, though. It's a great money accelerator, but it's a terrible money generator, isn't it? Really,
It's such a few. I think generally speaking, the space advertises and acts like this is something that you can do, and everyone's going to make a lot of money, and you just follow my 90% win rate strategy, and the markets wouldn't work if everyone was winning 90% of the time. That's just not how this works. And we're literally talking about one of the most difficult things to do, because the money is so huge. There's a reason it's hard. It's because everyone's trying to get at that money, and it's a very hard thing to do. Expect at least a year before you have the chance to become profitable at it, and just gauge your expectations. Raj is finishing up setting up the wheel, so it should be set up in a second. There we go. All right, we like to let the guests say the name because it's difficult to say the name very often. So we'll let you say it wrong. That's Donna Hung. Congratulations. You will get an email shortly with a $200 credit. It'll show up at checkout. I'll let you say that name, Dan.
Me?
Yeah, go ahead.
Obviously, you give me the hard. Sudhasan.
I think you're actually right, and I would have done it wrong. Yeah, so congrats, $200 credit there, and we're gonna do one more thing. If you signed up, you didn't win, we're gonna give everybody a $10 credit on their account. So when you go to checkout, this is on top of our current promotions that are running. We have 60% off all accounts, but we have recently brought 3 specific configurations on our static accounts. We have a pricing page for that. I don't know if Raj, you can pull that up. But if you go to the website here at the top, there's a link to the static pricing. You'll see 3 plans with very generous pricing, considering they are static accounts, which means you're at the end of the day or even during the middle of a trade or anything like that, the balance is not going to increase as your minimum balance to pass the test. And that applies in all stages of when you're working with us. When you get to the live account, it's the same situation. We think it's a very aggressive price for a really good opportunity. Yeah, that kind of represents it. Typically on the left is what you'd get at almost any other prop firm. As you make gains on the day or make gains during the day, even sometimes your minimum balance is going to creep up on you, and you won't have that space to make trades or deal with drawdown. With our static accounts, which is what these are, that floor just stays the same through the entire assessment, and it doesn't move. So it gives you a little bit more room to breathe. It's more like a traditional personal account. And yeah, check those out. And the $10 of credit can apply to those accounts as well. So I think you can get one for as low as $89, and that's all in. And just to keep everyone in perspective, we are CME Group members. We have seats leased on the exchange. So on top of having that extra room and that openness to trade your account and that capital appropriately, our execution fees are probably 40% of what everybody else is charging. So micros are 84 cents round trip all in, and our minis are about $2.40 all in round trip, which some of these places go up to close to $6 for the equivalent on an NQ. So yeah, let's hop over to questions. What do we got? Are we leaving silver alone? Currently, we're leaving silver alone. We're monitoring it as well. Anytime there's sort of possibly lower liquidity or new products, the traders do try to find a way to game the sim environment with fills. So for the most part, that's the only piece that we're worried about. Other than that, it's in live, it just becomes margin requirements, and as long as we're comfortable with the volatility and the margin requirements, we're okay with that. And I think we do have a few more slides, though. If we could just hop over to that and then finish up the questions after that.
Sure. So I think number 5 here is I think this is the obvious one. Okay, and I think probably out of all the people listening here, most people are journaling. As to some degree, I would hope. I think maybe I'm being naive, but I would say one of the key things there is that word regularly. And what I mean by, I found it hard over the years to journal after a red day, because you can maybe be a bit emotional after the red day, and you're not quite there with your psychology yet. You found it hard to deal with, and maybe because you're emotional, you'll skip it. That's just such a key missed opportunity for you. It is so important, guys, that when you do have that red day, that you do journal, and you journal particularly well, even more than your green days. Because the green days are great to journal. It's great to big yourself up and everything, but to be able to look honestly in the mirror, to be able to look at that red day and honestly reflect on what went well and what didn't go well, and what you could improve going forward. That's what's going to be most important for you guys, because it sounds simple, doesn't it? And many people will be saying, yeah, of course, but how many times have you missed journaling a red day because you're emotional and you've left it? And it's just so important that you do that, guys, that you do make sure that you stick to that journal on those red days, get that done. Okay. And one of the final things here as well, the number 6 one, it's just accepting that there are going to be slow periods, as part of your growth. There's going to be, even for super profitable traders, like they have times in their P&L curve where it's just not rising as much as it has previously. It's going to plateau out, and that's not unusual. Every single edge is going to have times where it plateaus out slightly, and that's where their journaling once again comes into it. I see it with the kids in my class as well. There are times where they just plateau out. I mean, my kids always plateau out, towards holidays. That it's a bit more predictable with children because they're getting excited for the holidays and it's sort of plateauing out there. But for traders, it's those slow periods are going to come. You're going to have weeks where you're red. It doesn't mean your edge is broken. It doesn't mean you need to change everything. It doesn't mean you need to throw all the tools out. It's a case of just, like I said, from that point 5, that honest reflection in the mirror, make sure you're journaling honestly and making sure you really learn from those red days when they come, and those plateaus, you really honestly reflect on those.
Also the journaling, it's so important to journal. Again, recording your screen helps because you can't lie about what you were doing or your decision making later. I think the gap between when the event's occurring and when you actually write it down is important, because the further away you get from that, you're like, well, I knew it was going to go long. I don't know why I went short. It's like, well, own it. So in the moment, and I understand people need to get in position quickly and maybe you don't have time to write something down, but write it down as close as possible to when the event's happening, to put down your actual thoughts. So you are owning it. It's getting back to telling yourself the truth, being honest with yourself. But this just forces that hand a little bit for you, so you can write it down that I'm going long, I'm seeing this, and this, and you don't go back later and go, well, I knew it was going to be the other way. I should have done it that way. And you're in the space of like recency bias and everything else that comes with trying to think, how did I feel at that time, hours later, when you're mad at yourself because you lost the trade. You're not going to get the same clarification or clarity doing it too far.
Yeah, for sure. Because journaling for the sake of, because I think I went through a phase where I was journaling and I was thinking I was being productive with my journaling, but then the journaling wasn't really, it was pretty much kind of what you described, really, not really that true, honest reflection. But in my head, I was like, well, I've journaled today. I've done my job. I've done what I needed to do, sort of thing. I've ticked that box. But like you said, absolutely. It's doing it as close as possible, being really honest with yourself. Absolutely crucial. Okay, so the process, okay, finding your weaknesses. So this is where just you've got to be able to review your trades objectively, and that's where a rules-based sort of assessment of your trades is just really, really helpful here, because it's going to really help you to identify where is it with your edge that you've particularly weak on here. And that's where with most sort of journaling platforms these days, you can easily tag trades as well, and it's just a case of I would always encourage traders to tag their trades. What was it that was particularly weak? Was it an entry? Was it an exit? Was it an emotion? Because that's going to allow you to really see some patterns. Like for me, for example, I noticed for me, I was always, my tag was revenge trading. It was an emotion. There was nothing, it was one of those where it was particularly the trades where it would go massively in my favor, massively in profit, and then reverse against me. And it was, in my head, it's like, well, that was mine. It was my money, and then immediately you jump on and you take another trade, which you've convinced is to your rules, but it's very flimsy. And then it's just a spiral from there, isn't it? But, seeing that tag every single time, revenge, you begin to see the pattern all the time, and that's when you dive into your journaling notes and, be honest with yourself with your emotion. I like to, when I'm in the trade, once I press the button to get in it and I'm managing the trade appropriately, I have like an iPad like next to me, and I'll just type down just very quickly any emotions that arise. Doesn't need to be anything. It just needs to be, because you don't want to take your full attention away from the trade completely, but just words, nervous, anxious. And it was always when the trade would go towards my TP, very nervous, very anxious, and then it starts dropping down, and it was just the same sort of things in my journaling all the time. So just being able to see those, tagging those in your journals, really, really important there.
Yeah, and I like to tracking your journals and your emotions and stuff. A lot of people think, well, how am I going to use that? You don't even have to use the data later, right? There's a stepping stone in here where it's like, just get out of your head, right? Just get out of your head with these emotions, and you'll start objectifying them, as opposed to trying to fight them in your head of what they are. And I'm not really feeling that. It's like, just write it down. I'm feeling this right now. And maybe you throw it away when you're done. It doesn't matter. Just getting that process out onto paper can make a huge difference for a lot of people.
For sure. And this is where, the number 2 on there, match it to a concept. So this is where just that pure focus on process, on habits. It is incredible with trading how, more simply you can make something that's extremely hard, because trading is extremely hard, no matter what anybody says, but you can just make it so much more simple by really zoning in on the structure, your rules, your processes, daily disciplines, your routines, your habits, really focusing on those day in, day out, like I said to the listeners earlier, and tracking those. That is what is going to be absolutely, it's just, you will see your results go crazy if you really, really spend all your, a lot more of your energy and time into focusing on the habits, focusing on those daily disciplines, rather than
I will guarantee if you start doing this now because you weren't doing it, and you come back in a month, in one way or another, you will be clear. You might not be making more money yet, but you're going to go, oh, wow, I was just randomly pushing buttons on the chart, and I was following whatever the latest and greatest YouTube video I saw was on strategy, and I was all over the place. You will in a month feel better about everything you're doing here. It might give you clarity, and it might make you realize maybe trading's not for you. That is an option here. But not knowing and living in that space of confusion, and living in that space of, I don't know what I'm doing, but you can't clarify what parts you don't know what you're doing, is a scary place to be in. So everyone should do this. It's a blanket yes. Everyone needs to be doing this stuff. I don't think there's any exceptions, unless, if you've been trading for years and you're killing it, and don't listen to me. But most of you in here are probably not at that point where you're making millions of dollars a year and you have no problem with any of the execution, and you're just nailing it all the time. I'm happy for you. You're probably not in here. So you want to get to that point. You want to get in that direction. You want clarity. This is the stuff. It's the boring crap. It's the tracking, writing, planning, everything you do outside of the space. You want to get in a rhythm where you're waking up in the morning and I'm doing this, and that just leads into your executions. I'm looking at the charts. I'm looking at the 5 markets I look at. I'm looking for setups. They're there, I execute. They're not there, I don't. And then I close the day, I review. And then next day, just like get into that rhythm and let that rhythm flow through into the trading day and see where it takes you.
And that's it. Then your key word there was boring. Like it, following the process, following the rules, following your habits, it will get boring.
Sure.
It will. You'll be super motivated at the beginning because you've just said, what it's like, new year, new me, sort of setting new goals. You're super motivated, but the motivation never stays. It always disappears, always goes. And
everyone gets hooked. A lot of people get hooked on that rush. I over leveraged and I made a bunch of money, and like, hey, I've got a 1K of drawdown and I just used 5 minis and I managed to make $3,000. cool for today, but what's that mean for you if you keep doing this over the next week or a month? It's not going to play out. So you have to get rid of that sensation that feels like it's driving you, of like these huge wins and bad situations. Um, all that stuff builds up until you start giving yourself clarity. All right.
Sure.
I think I got to do the next slide here, right?
Okay, so this is what I'm currently working on. So, it's one of those now where I've been, as well as working on my trading over the past sort of year, just trying to build, more of a personal brand and stuff, and posting more on X, Instagram, YouTube, and especially on X, just getting a bit more attention, which is great, and I really love all the encouraging comments and all the support I get, especially if it's after a green day. People love sending like, positive encouragement and stuff. But it's one of those where I feel the ego starting to creep in, to be completely honest, where I start believing my own hype, and I start believing, I'm this amazing trader, and it's one of those where the market will kill that ego. And I know that as well, because we've all been there where we've oversized through overconfidence. And for me, it's just about now really balancing the growth of the personal brand for myself, which is great, but also as well keeping an equilibrium, making sure the ego doesn't really overtake. I will never be one of these traders who's like, let's go after I sort of get a win, because I know the ego is going to start building, and I don't want that at all. As great as it is, that mad rush, but I'm trying to keep an equilibrium. So for me, just balancing that ego, making sure it doesn't overtake me is kind of really important. And that's where for me personally, I'm just trying to make sure.
By it, it's obvious you get burnt by it. That ego turns into, I can do anything now. Sky's the limit. Look, I was green on the day. Now I'm just going to pull out more money. Let's double my size. These are the thoughts that come through your head. Like, oh, I made $500 today. Now, what if I just doubled my size tomorrow, and then I made 1,000? And let me start doing some math. If I did this every day, and then I would compound, and I would be making $4 million a day. It gets to these crazy ideals that you're holding yourself to, and it usually spawns from ego. And
sure,
expectations that just aren't real.
For sure. And that's where the social media is such a dangerous place, to be in, because you want to post these big wins, and you want to post these, sure, fantastic green days and stuff, just to feed that instant gratification and that ego. And for me, it's just, I'm just trying to keep things equilibrium. And that leads beautifully into that second point there, structure over emotion, where I am very zoned in on my process. My process is my number one thing that I focus on with my trading right now. And the results are starting to show, which is great in my trading. Getting more payouts, which is good. More payouts will come if I stick to the process. I know that. And that's where I am fully locked in on that. For me, it's just, I'm very clear with myself. I'm a one trade a day kind of guy. I've seen my results, improve so much just sticking to that sort of structure and routine. I think it just gives me that emotional equilibrium, because I'm thinking I'm one trade and I'm done regardless. So whether it's a win or a loss, that's it. I don't need to make any of this.
You can get. Yeah, that's great.
Yeah.
And the scale in futures is so ridiculous because of all the liquidity that's not a wall where you're gonna have to rethink things, as you want to size up your trading, or as it does well, as you hone in that edge, you're going to be able to add size on to that same trade, assuming you're not taking 5 ticks and risking 5 ticks. That might be a little different, but the liquidity you need to get in and out is all there. So that process that you build might be boring right now, and you're still trying to figure out what that edge is exactly. But once it's all aligned, the liquidity is there for you to size up on that exact same process.
For sure. And that's where, and it's not just the process in trading as well. Like I've said earlier, it's my process outside of trading as well. Like I said, with my daily disciplines, getting the things that I said to myself that I will get done per day, sticking to those. It just makes me feel so much more relaxed going into my trading, because I feel like I'm going to be more confident following what I said I'm going to do in my rules, because I've said what I'm going to do outside of trading. So it's once again coming back to what we said earlier about sticking to your word. And this third one here is I think my most important one, because as a teacher, 9 till 5, I'm getting a paycheck every single month, which is great. And I have for too long looked at trading like that, where I look at it like by the end of the month, I should get something. I should get a payout. Like a payout I should get because it's the end of the month. And, and it's one of those where trading doesn't work like that. And especially with the rules from prop firms that you are, fast is slow, so slow is fast, right? It's a case of just you've got to take your time with these prop firms. You've got to, because the rules, are encouraging you to do that. Because prop firms are looking for traders who do take their time, who do have a responsible equity curve, and just, for me now, because I'm, copy trading across accounts, I am happy to wait now 1 month, 2 months, 3 months. I don't care. Like for me, it doesn't really bother me. And that's been a major change for me. Like, it's not a case of now I don't judge the end of the month based on, I got a payout or didn't. It's a case of, did I follow my process? And that's what I'm really zoning in on now. And that's made a massive difference.
Yeah, I love that. I love that. I love this whole story because I got a couple young boys, 9, 11, that age range. And I'm seeing their discipline. I'm trying to encourage them in the same way that you're teaching your kids and stuff. And really adults are just kids with with more birthdays, right? We've just had more birthdays.
Yeah.
And a lot of people have gone through a lot of their life without this kind of structure, and maybe they haven't dealt with this level of emotion over decisions where their job maybe didn't push them in that. Now they're dealing with this, and there's a lot of noise coming in because everyone has these expectations and they're pushing real hard. They're oversizing, they're over leveraging, and slowing down. It sucks to hear the word slowing down, and people just fade out when you say that, but slowing down really will do better for you in the long term. And a lot of that is because you're sizing appropriately for your account size. You're not over trading. That's the net effect. That's what you're going for with slowing down, is not pushing buttons when you shouldn't be pushing buttons.
Yeah. You allow your edge wiggle room within the rules set out in front of you, don't you? For sure. This is one here, imposter syndrome. I'm still terrible for this. Where, I'm starting to get better results and I'm starting to, build confidence in my system and stuff. But deep down, deep within me, there's a feeling of this is all going to crash. This is all going to sort of, like you're not as good as you think you are, sort of feeling. And, this is something I'm really working on at the moment. And that's just where just my journaling each day, that honest emotional reflections are just really important for me at the moment to work on that. That I think that will smooth out over time. I think as I continue to follow my process, which will hopefully lead to more results, which will hopefully give more confidence, and hopefully, do you know what I mean? I'll tell you what
though, I feel like you have your discipline. You're very comfortable. I'm trading my 1 trade a day, right? And you've got that. Imposter syndrome is not going to get in the way of that, right? It sucks to feel it, and it makes you worried at night. Like, do I know anything about the market? Am I doing the right thing? Are the buttons I'm hitting at the right time the right buttons to be hitting? Imposter syndrome is way easier to work with for growth than the opposite, where someone comes to us and they're like, no, I'm the best trader in the world. I don't want a daily loss limit, and that's what we see way more of, right? Imposter syndrome is like, oh, good. Like, this guy just doesn't realize he's good and he's found some system. We can work with the system. We can't work with people that are in some inflated view of themselves and they think they just know how the markets work, and they've done ICT or whatever, and it's some magic combo and they can risk everything, and they got to pay out somewhere one time, and it's all this stuff we hear all the time, and it makes it so it's a struggle to work with someone like that unless they're willing to kind of bring it down. So imposter syndrome is on the right side of the needle, is what I'm getting at. So that's a good.
That's good. That's good
it's a
to
good thing
hear.
to have. Yeah, it's a good thing.
Yeah.
Don't worry, you'll get there.
Yeah, good.
And you
Good
might
to
have
hear.
imposter
And
syndrome
so
forever, but maybe you're printing too.
oh, I really hope not. I really hope not.
Yeah,
but,
yeah,
but we'll
okay.
see. But but and that sort of feeds into that last one there as well, just a neutral confidence. Just really just working on that just equilibrium. That sort of I'm not trying to suppress emotions. I know you should, shouldn't do that, but just trying to just let the process take care of itself. And it will. There will be green days, there'll be red days, but the process will do the heavy lifting for me.
Sure. All right. Is that the last slide there? I don't know if we have any more questions. We could throw those up. Raj, you still there? Tend to focus on the outcome rather than all of our. Okay, I'm in such. We went over that one. This is for you. Do you agree? Trading is a lonely business. This is why we need community, cities, like-minded individuals where you can bounce ideas and communicate, because it's hard to explain to, I'm assuming, people that aren't in our world. There you go. People you love and family.
I completely agree. I think there's there's not a lot of my trading journey I would redo. I'm so proud of the journey I've gone on, even the YouTube university load of rubbish, for watching all those videos and stuff. But if there's one thing I would change is joining a trading community earlier. A respectable, trading.
Be very careful about the communities you join.
For sure.
Very careful.
You need to be able to really relate and connect to and fully trust the person who's at the head of that community. But once you find that, because there are some amazing trading communities out there these days, I know there's a lot of rubbish out there as well, but there are some amazing ones. I think that's what I would change, is doing that earlier, joining that earlier, because my wife, I suppose, has turned into my psychology coach, my trading coach, all in one. She's actually incredibly good at it, which is very strange.
Is she also a teacher?
About trading. She's an English teacher. But no trading sort of background or experience. But
sure.
But incredibly good at keeping me grounded and being there for me through the highs and the lows and stuff and everything. But a community would have been great as well from the very start too.
My daily base hit is 200 for 12 days, but I made 300 for 12 days. Is it still passed? Yes. Also, if I made more than my daily base hit, is the excess amount I made can be used for drawdown? Yes. When you get to the sim brokerage after you pass, there's no daily base hit concept, but we still highly suggest you stick to it or something close to it, because we do see that often. People pass and then they try to YOLO pass the sim brokerage because there's no more base hit concept. But that usually doesn't go well, because that bad part of your brain takes over and you start gambling and you start getting aggressive because you think, oh, I've done so well getting to this point, and now I'm good. I'm a good trader. That proved it. Now I can just do whatever I want. Don't change your risk protocol after you pass. But yeah, to answer your questions, the way we structure daily base hit as opposed to traditional consistency rules is 100% to make it so you can make as much as you want in the day and it's not going to slow you down passing. It's a good thing to make extra, but it's not going to pass you faster or slower if you make extra. I know you're a trader. When will we get you as a guest here so you talk about your trading strategy and trading from your point of view? Yeah, maybe one day. Yeah, maybe that's a good idea for a show where I kind of go over the charts and what I'm seeing. And I don't get to trade very much anymore just because I'm having to be CEO. I'm also one of the developers here on Everything You See too. So unfortunately, that's what we're doing here. We're trying to build a prop to get people who are good to trade our capital. And I'm trying to make everyone else the best I can. And that gets in the way of my own trading sometimes. I've almost totally stopped trading minis. It messes with my mind. Micros is the game. Yeah, it's not micros. It's not minis. It's how much drawdown do I have? What's my available risk? And you work backwards from there. And if you're just going for minis because you feel like those are for the big boys, that's what I need to go to. That's who I am. I'm looking for tens of thousands of dollars a day right now, you're gonna struggle because you're not working within the limits that are given to you. You're trying to force something to appease an ego. So yeah, micros, that story. And if you look in our Discord channel, it's just one after the next. It's like, I've slowed down, the daily base hits are great, I've reduced my daily loss and my risk per trade, and I'm trading micros. And we see it, we see it on their P&L growth. They're just these nice upward trends on their balances. Micros are really the way to go. We will give you minis, if you have a strategy that is very short scalping and that works for you, sometimes minis can make sense. But for the way people hold a trade risk wise, please don't fall into mini is the only way. Really make a conscious choice of why you're using minis and why that makes sense for your risk. How does static differ from EOD? So end of day, if you made $1,000, the minimum balance on your account would go up $1,000. It'll stop when it hits zero, but every time you close a day that's higher, it's going to keep following you. So if you lose some money over the next couple days, you might lose the account. With static, it stays grounded. There you go. That's better than me using my hands. With static, you can see on the right, it stays fixed. It's that yellow line. You're making money. You're still going to have the full available drawdown during that period of time. So static's really there's no reason EOD or intraday trailing. There's not a single reason those are better other than, on paper. Some people might say, I guess you could say EOD makes me manage my risk better because I'm tighter on my risk or something. But for the trader and what we're offering you, there's nothing better than static. It's literally like if you opened up a personal account and you had a certain amount of drawdown on that account. It's the same equivalent. If we have any more questions, could do a couple more. Thing that really helped me is controlling not only the losers, but the winners to with the daily hits. Takes out the greed of the equation. Of course, our dashboard's the best. Yeah, I appreciate that. And I have an ego about our dashboard. It is the best. I will say that. And I'm glad the daily base hit thing works because, again, a lot of people have expectations that are, I'm going to hit the moon today. And you don't want to miss those opportunities. Most people need to just focus on, let me hit a base hit, let me take my trade, not over leverage and stop. Get to my base hit, stop. And that upside we're finding is extremely valuable in the assessments. We're seeing a lot of control, a lot of just sustained growth over time. So we're trying to brainstorm some ideas to bring that in all the way through into the brokerage process to get people to, again, if you have a runner and it's moving and you make a crap ton of money in the day, we want you to be able to capture that, but we don't want it to be your like standard expectation. And when you go into the brokerage, emotions are coming in, you just transitioned, you're feeling really good about yourself. There's a lot to fall down from. So giving someone both an upper boundary as well as a lower boundary, being the daily loss limit, I think there's something we can do there in the brokerage that can help a lot. So we're trying to make daily base hits somehow work in the brokerage. I think the CEO, Josh, taking time out to be with us in the live stream is absolutely brilliant. I appreciate that. The faceless man. Oh, look, it's our buddy Tyler. He was on a couple weeks ago, and he's just wondering how I got so handsome. It's just a lot.
I thought he was talking about me.
Oh no, yeah, I don't know why I thought it was me. Yeah, it's definitely talking about Dan. So we don't know how Dan got so handsome. I think it's the weather in Dubai, over near Dubai.
Absolutely,
I'm not really sure, but yeah, I doubt he just wakes up looking this good. He probably has all routine, like you mentioned, for getting ready. With EOD, when the floating loss hits max loss, the account is breached. Yes, it's the same with static, except for static's not going to follow you up day by day. So let's say you had a 2K drawdown account with us. If you made 2K in the account, in an EOD, your new minimum balance on that account would be 0. With ours, it would still be negative 2,000. So you technically would have $4,000 to draw down to work with to continue to get to your target. Being hung up on a red day is the worst. It can influence your thought. Yeah, it's hard. And what makes it harder is when you say, oh, I'm down, 90% of my drawdown today, and I'm going to go ahead and try to let me just gamble and try to make it up. And that works. You're really screwing yourself for the next month because now you're stuck in your head of, well, the last time I got put into a corner like this, I got really aggressive and it worked. And you're going to chase that because it's a possibility, and you need to get that possibility out of your head. That shouldn't be an option. That's just statistically, you will blow up your accounts. You won't be able to hold accounts for long periods of time when you have a mindset like that.
And it will build bad habits as well. I mean, as we said earlier, the more you do it,
the more you do it, that's who you are. You'll think, oh, I'm just going to do this during the evals and the assessments, but when I get funded, I'll be this different person. But you're going to find yourself, if you're out there playing basketball and you out there and just are shooting like an idiot and taking all these stupid shots and not using proper form, and you're doing that every day, when the game comes on, that person's going to struggle. That same person that was just doing whatever they could to get the baskets isn't going to be able to do it. I used to chase red days just to break even on it. Caused me to blow multiple times. Yeah, absolutely.
That's where what one trade a day has helped me a lot, because that's something I used to struggle with. But just one trade a day with proper risk management, a sensible dollar risk for that trade, it makes you very happy. Because how many times do people blow a prop firm account by 10 to 15 responsibly placed trades exactly according to rules over a period of time? How many people blow a prop firm account?
A lot of people
Probably
get to
few, right?
Yeah, so there's a lot of people that just go for it from day one. They're just as aggressive as possible. If they're going red, they just don't allow it. So they're just green streak, green. I lost it all, right? So we see that very common. Yeah. We see a lot of people get to the 80%, 90% mark, and it's just like it feels right in reach. And so they try to, I guess it's sort of like a marathon where you've kind of just paced yourself, and then you're getting to the end, and you're like, I'm going to burst run for this the sprint for the last 10, 15%. And unfortunately, while that would work in a marathon, you're basically running on a very narrow road on a mountain, or you're going across a high wire balancing, and that you can't do that. You're gonna end up falling. So I would say those are the two kind of archetypes we see. And then there's people in the middle, but for the most part, we see a lot of a really heavy aggression that fails. And then people that, one pattern that I see that's actually really funny is just without even talking to someone, we've got some pretty good admin tools. We're really tech focused here, so we can monitor things and see kind of individual stories of traders. And what we can see is sometimes you'll see someone blow 20 accounts over a few months, right? And it'll just be like YOLO fail. You can just see it happening. Just a couple days, everything, doing that kind of a pattern. And then they'll get to one point where they're just like, okay, I'm done with myself. You can just imagine the story that's going on in their head. I'm done with this. I'm going to do it the right way. I'm going to do this carefully. And it's wonderful. And they go up and then they pass. And I love meeting with those people. I love talking to those people because they went through that progression of, I'm going to do it like I do everywhere else, because they have a one-day pass, or they have something that they get in that routine of just getting really aggressive with, and it's not really getting them anywhere in the long run. And seeing that progression happen where they've blown that many accounts, and then they have an account where they bucked up and they said, I'm just going to do this the right way. It's low drawdown, just a nice curve. And it's like, look, that's something you could do. Look, if you don't want to stay with us when you pass, and it's not, you want to just start taking all the money out and you want to move on, and that allows you to trade your own personal account for a long time, we feel, that was a good exchange. We gave you value. You got that value. And hopefully that makes you a better trader. And maybe use that to go milk all the other prop firms. I don't know. But we see that a lot too. We'll see a lot of people come to us and say that I was failing. Now I learned how to trade appropriately, and now I've got 70 different prop firms that I can go to make money in a good way, in addition to my personal account. I don't have to feel as nervous about blowing that. So yeah.
it's that sort of disgust, isn't it? It's once you get to the disgust level, you know, I don't know how someone buys 20 accounts
and you ran out of money
from those.
or you changed something.
What's up?
You quit because you ran out of
just,
money, or you changed something. There's sort of two paths.
I mean, just discuss in general. Just
sorry, I think you're breaking up. I don't know if it's me.
Am I breaking up? Oh, okay,
just a little bit. How many trades is a limit for a day to profitability? So I can tell you statistically across all the traders, across all the trading days they've done, the 4 or 5 trades and under group generally have better results. Again, everyone's individualized, so I don't want to marginalize anybody's trading habits in terms of there's plenty of traders that can take 20 trades a day and they're scalps and there's opportunities that they see and they're profitable all the time, right? That's totally a valid thing. But generally speaking, if you look at the statistics overall, 4 and under is sort of the sweet spot for traders and success, at least with our data. Above that, you see higher win rates as to be expected per trade, but you see much less success on average as a whole across the board. So just take that into consideration, but follow your strategy. That's really what's important. We'll take maybe 1 or 2 more questions and then we're going to wrap it up. We're already pushing it here on time. Point of the TFD assessment is not only hitting the profit target. Yeah, it's learning a cadence. It's learning to set your expectations, and it's learning to stop for the day when you're red and not turn everything into max loss all the time. Definitely coming back. All right. NQ Soccer Mom. I like it. All right, guys. I really appreciate you coming on here, Dan. Your perspective is very helpful. And I think there's so many parallels to so many things in life. And the basis of it is, how do I learn? And that's sort of what you've demonstrated here for us. So, one more question. Josh, tell us your take on DCA. Do profitable traders do it? Okay. So DCA is kind of a broad term that I think in the investment land is, which this is not investing, guys, this is trading. But it's the same concept, right? You're adding to a position that's losing in a sense. So you're dollar cost averaging maybe this position's going against you and you're adding to it. There's nothing wrong with planning on adding. And I think I went over this in a couple of weeks ago, speaking with someone, but you shouldn't go full risk and add another portion of full risk. And then it keeps going against you and you add full risk. That's a recipe for disaster. That's the DCAing or adding to a loser that is going to catch up with you, and it's going to hit hard when it catches up with you. When I think of DCA, I think more in terms of, okay, well, let's just get rid of the term DCA. Let's just say you're adding to a position that's going against you. If you find that based on the volatility of the market that day, you see a zone of entry that you want to put on risk for, when it gets to that area, if you're saying, okay, I know the volatility's increased, I'm probably not going to nail the first entry, but I do want to get into my full position in this zone, you need to plan for that. So if 1 R being risk, and 1 unit of that risk is $100, put on $30 of risk in at the first zone. If it gets to the second area of your zone, you can add. Now you've got 2/3 of that risk, and then you're going into full risk, right? So now you sort of average out your entry in that area, keeping all your risk management the same for where your stop should be. You don't get to increase your dollar risk per trade by doing that. It's here's my trade idea. Here's how much risk I'm willing to put on it. I just want to split that up over a zone. That's okay. That's what I see as okay. What I don't see as okay is, crap, it's going against me. I'm just going to add again. And I'm going to add full size again. I'm going to add full size again. And then you just keep going and trying to find the bottom that way. That's generally a recipe for disaster. So basically you're saying it's a good idea if you target a zone where the price should bounce from. Yeah. And then again, those nuances matter, are you targeting the zone? Why is the zone that range? Are you willing to there's the opposite side of that, right? So if you get into an entry and it goes in your favor, you have to be okay with 1/3 of the profit in the same way you were reducing the risk to 1/3. So it might hit your first entry and take off. So just gauge and laminate those expectations on the trade on both the risk side and the profit side, if that's your plan. But the biggest part is have a plan, right? Don't just go into a spot and be like, damn it, I don't want to close this trade. What if it works for me? I'll just add more as it goes against me. That's I can almost guarantee you it might work today, it might work for 5 days, and maybe that's okay with you, but you keep doing that and you're going to have massive blow up if you're risking more and more and more in a single trade and you finally get a loser. DCA increases your win rate, right? But it increases your risk. That's the most important component of that, is it increases your risk, and when it doesn't work hard. Cool. All right. Thanks, Dan. I don't know if you have, can I use that same handle, Dan Cook Trades?
Yeah,
Dan Cook Trades.
It's my same handle
Okay.
on all my social media. But yeah, thank you
And
very
I
much
don't know if you're
for
in our
having
Discord
me on.
yet.
Appreciate it, Josh.
Sure. But if you guys hop in our Discord, we're all there. We're all talking trading. You can ask us questions about the futures desk or anything you want. But other than that, I appreciate it, Dan. Have a good night.
Thank you. You too.
Thank
Bye-bye.
you, everybody.